Hey everybody, welcome back. It's great to have you here. My name is Mike Fairborn. Good to be here with you for markets and sectors. Folks, we're seeing the markets kind of inch up a little bit. What's interesting is we are seeing some strength in a couple of two or three different sectors, but some other sectors have kind of been down to sideways a little bit. But it's those positive sectors that are really lifting the S&P 500 up. What we want to do today is really kind of break down and see from a top-down level as well. What are some of those industries behind those sectors? And really just kind of maybe do some top-down example trades like we've been doing that tie in specifically into market strength, sector, and finally that industry strength. So I'll look forward to going through that with you folks. Joining the chat by a good friend of mine, 30-year veteran in the markets, Mr. Ben Watson. It's great to have Ben on board. Folks, any questions, comments you have, throw those in the chat. Because Ben, I'm telling you what, we're privileged to have Ben on board here. He does a number of presentations and discussions in a live event format, and I've been privileged enough to be there with him. So it's a privilege to have him here with us today. All right, folks. By the way, next week, just so you know, this class is going to be rotating 1 hour later, which does make a little bit more sense when we're talking about markets and sectors. How do we close on the day? We want to have that towards the end of the day. So we're just going to rotate with James' class. It'll be an hour ahead of mine. Mine will be at the 2 o'clock hour my time, just 1 hour behind this time frame. But just a heads up there. Hello to you, Lena, Jackson, Heather, some new names. Great to welcome you all here where we do look at markets and sectors in this class. I do recognize Chris B, Vic, Life in the Fast Lane. Hello to you, Frank, Jay Richardson, Kevin, and Mighty Mouse, as well as Tatiana, David, and Beth. Good afternoon to all of you. Really excited to get into this, folks. So let's dive on into some disclosures and get going here. And by the way, quick note, you can follow Ben and I on X, Ben Watson CS. You want to make sure you spell that correctly. Ben Watson CS, as in Charles Schwab at the end, Mike Fairborn CS as well. We have a few imposters out there. Just a quick note on that. All right. Well, let's hit our disclosures, folks. Information here is for general information purposes only. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money software application is for educational purposes only as well. We've talked about that before. And wanted to state that investing does involve risks, including for some products more than your initial investment. Now, futures and futures options trading does involve substantial risk. It's not suitable for all investors. I wanted to read through that because, well, what we do here in this class is we like to review just the charts of futures and futures options. We don't do any trading of those in this class, but they are very, very helpful. And folks, let me just say this right now. They are going to be helpful today as well. So wanted to bring that up. They're just very good and interesting to kind of keep an eye on. Okay. Well, with that, I wanted to state past performance is no guarantee of future results. And if we are able to get an update into the stacks, I don't think we're quite there yet for our stacks update, but in case we are, historical data should not be used alone when making investment decisions. The stacks is not a tradable index. The stack should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. Okay, so with that, let's go ahead and just start sharing here. A good look at the S&P 500. You can see us inching higher here, and we'll see how we unfold here in terms of, are we able to kind of tackle a little bit of this resistance that we might see up top here? And what I want to do is actually maybe take a 9-month visual. 9 months, which we do have the time frame for. I am going to use, though, the ES to help us with this because I want to get some volume in here. I want to go over the time frame that makes the most sense in terms of, hey, when were we over here? How much volume really came into this range over here? And are we seeing any volume in terms of the volume profile that might line up with this resistance level right here? Because you can see the futures, which oftentimes can lead the index. We're not quite too far above the prior high. In fact, it looks like we're resting right at it. This can be an indication. Even when you're looking at, let's say, for example, I'm just going to pop back to SPX real quick. Notice we're just slightly above. It looks like we're breaking higher. Well, on the ES, the E-mini S&P 500 index futures, which is still referencing the same 500 companies as we have in the index here. It's just the futures component of it, right? we're right virtually at that level. I want to see what the volume profile shows us here right from the get-go. Because when you're at resistance, you always want to see if you're kind of being reinforced by the volume profile, if it does fit in. And by the way, folks, down here in that value area percent, right there, it's kind of nice. I just adjust this. Instead of showing me where the largest 70% of volume came in, just give me 10%. That's all I'm after. I just want to see where the spike is and find out where the point of control is. Now, that's on the 1 year. And that's going to mess things up a little bit because you can see down here, there was a lot of volume over here. I'm trying to cut out, folks, these first 1, 2, 3 months over here and really just focus in on maybe 9 months or even 6 months. So let's go up top and we'll go to time frame under the 1 year right there. 9 months. What do you see there? Did that totally change or what? Because when the volume profile is here, we want to isolate the trading range that makes sense to where price is trading at now. The point of control over the last 9 months of trading, and that's a lot of trading. That's a lot of contracts actually traded here. The point of control is where we're at right now. Do you guys see that red line? Oh, that's not going to show up too good on that blue and blue. Let's go. Good. Oh, yellow should be fine. Yeah, there we go. Okay. See that red line that just kind of sticks out right there? You got this sort of clouded area. That's that top 10% I was going to show you guys right there, 10% of where trades have been. But the biggest number, and that's that massive spike over here. In other words, we had the majority of volume come in at, I'm just going to draw it in. In fact, let's put it in red so it lines up with our volume point of control. Right there. At those prices, we had the biggest volume, folks, and that is check right there. That's check right there. We're right there right now. We held there for a little bit, but clearly here, 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 I mean, there's just a lot of trading activity there, and that does correlate a little bit to the S&P 500 as well. So what that represents for us is maybe some, how shall I say it, some tough sledding, folks. It's like me trying to mountain bike up a hill when the wind is hitting me. I feel like it's 3 mountain bike rides in one, just getting up that hill. If you're below it, it's a headwind. And we might be seeing that headwind right now. You can kind of see it slowing down a little bit. I'm going to zoom us on over to the 30-minute chart just to kind of show you what price action has been doing right at that point of control. Look at this. I mean, we just have not made a ton of progress. Now, it's not to say that we're going to break up higher. We might break up higher. But right there, folks, this all lines up with the point of control. 30 minutes chart. So this does take us back, yes, to like mid-May. This is May over here, mid-May. Down below, you can see that's our mid-May. But, still, isn't that interesting that is the high point on what can oftentimes lead the SPX? We're right there. So, whether people know it or not, I mean, if you don't know it, if you're not, not seeing it, and by the way, if you're not seeing it, it's not there. I mean, we have to literally know that, it's just as good as not being there if people don't recognize it. But that point that we're seeing on the daily chart, there's just 9 months of the biggest volume right there, and that's a big spike. Now, I would also say this too. Do we have another spike in here? Because that's how that volume profile works. Folks, spike, can't ignore that one. I mean, that's the point of control, but you get another spike right there. So this whole range is a lot of volume, but do not ignore that point of control. I would just say this, if we are above it, if we can break above it, we might be able to hold, and in other words, the sort of the corollary to resistance would be support. Old resistance can become support. Old support can become resistance. It just depends on where we're at. That's where, these contracts can be very, very helpful. You guys find that helpful? I mean, it's interesting because I don't think a lot of people use volume profile. They might not use it with the S&P, the ES, but because you're not going to get it on the SPX. So we're just looking at price data without really seeing that whole additional sort of a dimension there of volume. All right. Now, I jumped off it a little quick, but I did want to point out to you that I can go over here and just take a look at, while we're on it, while we got volume, we might as well, because we do look at it all the time, what's going on here with our money flow. Now we're just gonna look and let the charts tell us, what they're showing us. I know a lot of us have a bullish nature to us, but we're just going to recognize and see what's happening here. This high right there was at a higher money flow, higher volume, collective volume is what money flow does, right? We actually made a new high here in price, yet did we have the support of volume behind it? Folks, we did not. I'm going to clear this off, and I'm just going to draw you a diagonal line here just to represent the slope of that trend, highlighting the fact that, yes, it is going down, and albeit very slightly, this is going up. So this is showing weakness. And what I will say, too, is not just looking at highs, but look at the last lows with me, too. Do you see that low right there? That is a higher low than this low. Yet, that is a deeper low than this low. So early indications, we're combining that with volume profile using the ES as a guide here. All right. There we go. By the way, speaking of the ES, Ben Watson teaches a great futures class if you guys are interested in futures, specifically where Ben does go through. We just talk about the charts here. We don't trade them, but Ben does trade those and trades a number of different contracts. It's very interesting, all the different areas that Ben gets into. It's one real cool aspect of that class, amongst many others, but he teaches that on Tuesdays. All right. Well, let's see. What else do we have? We're going to go back to our markets over here. There's the S&P 500 just coming above some highs. Here's that NDX. Well, a little bit stronger. So we're going to be looking at some strength today too. But you can see we did break above that high. Clearly, that's a bit stronger. It tells us a little bit about technology. It's a little tech heavy here. But the Russell, okay, the Russell's still quite interesting too. And the Russell, if we do get a breakout, this is well, it's appearing to look like what is that pattern, you guys? What is it? I think you've seen a lot of us talk about these, but let's put it this way. If I flip that upside down, I think you guys are going to get it real easy. Real quick here, watch this. Just go a minus RUT, right? So we invert everything. You see it now? Do you see how this could be a sign of possible weakness if we break below the shoulder? There you go. BJ nailed it. So did Chris B. It's an inverse, right? Jay Richardson, you guys are right there. Shoulder, head, shoulder. If I've got the minus in there, the minus rut. But we're not in the parallel universe. We are in this universe, and the rut is or the inverse universe, whatever it is. I'm kidding. But no, there you go. That's an inverted head and shoulders. So I would say, not me, but I'm just saying traders, if they're looking at this neckline might show, which is a resistance level. That is resistance. Make no doubt about it. On the charts it is. Now we'll see if it continues to hold, but there's 3 key levels of resistance there. If we can break above that level, if we can break above it, it might not just be more than just a break above resistance. It might hold with it that inverted shoulder, head, shoulder, which I know some of you, especially those of you that jumped out and let me know exactly what you saw there, you probably have in mind, hey, perhaps that this range right here in price, if we do get a breakout, it could map out. Ooh, did I do that right? This distance in price. I don't know. I just kind of eyeballed it, but this price right here to equal this price to the upside. And that would put us right back towards these levels. Now, the rut has been an underperformer, and that would be welcome to a lot of people that have been kind of stuck in the rut, right? So to speak. It has been one of those situations. So, yep, you got it, David, Jack, Andrew, Vic. Yep, inverted head and shoulders pattern design. Look at you on the chat there, folks. Just a quick note. Ben's noted here that there is a feedback for today's session. Guys, if you're finding value from this session, if there's something you like or helpful, whatever the case might be, there's only 2 questions on that. If you're able to fill that out, I'd appreciate it. If you want to. You just need to click on it during our discussion here. Otherwise, that link's dead after the class. But always love to read your feedback. And Appreciate it. My manager looks at that too. But just a little note, that is a way to provide us feedback, topic requests, etc. All right, etc. Okay, so let's jump in over here and let's take a look at our. We're going to do a little bit different today. We're going to do our top-down trades kind of towards the end. So I'll look at the sectors momentarily. For now, let's go ahead and do a market and sector review. And let's take a look at a few of these different insights here in terms of what we might be getting. Now, we didn't quite make it below the minus 100, which is really, really interesting on our McClellan oscillator, which we do use on the NYSE. If you get below that and break up above it, it says, yeah, 2 to 3 weeks. And that has been pretty interesting in terms of delivering results for us when we go, below the minus 100 and then rise above the minus 70 is what you have to do. You got to get above. So you got to push in greater than minus 70 once you get below minus 100. And then it says 2 to 3 weeks up to this area here. It would be down 2 to 3 weeks if you go below 70. So we didn't quite get there. So we just are kind of sideways right now. So not too much from there. Kind of coming down a little bit in our summation index. What I was really wanting to see too is how too does this advanced decline line, which I like to really bump up here so we could see it a little bit better. This has been a really early guide for a lot of the run that we have had previously. In fact, you'll notice over here with me, folks, this can be a leading indicator. Advancers versus decliners. Think of a key term out there. Market breadth. You got the bread in there with the TH. Breadth. We did break a high here, did we not? We broke a high right there. Now, where did that high break? Let's take a look at it right there. Oh. Well, let's take a look at it with a straight line, because otherwise it's absolutely redundant and useless. Look at that. It comes at a funny time. These come at interesting levels. Do you see that? That did not hit a new high. But what that tells us is that if we break that as a leading indicator, we are likely, according to the advanced decline line, take out this high, which we did. We actually ended up taking out that high. So that was leading the way through market breadth. And that was our focus here. How are we doing now? It's very, very similar to the money flow line. And by the way, there was a comment on the money flow versus the Chaikin money flow. This is a little bit different. Chaikin money flow does take a look at the RSI combined with money flow, which is interesting, Heather. Money flow is simply just, did we close up on the day? If we did, let's add all the volume to the upside. If we close down, let's take it all to the downside, upside or downside versus on the close of the day. Is money flow. Now, advancers versus decliners, we just had fewer advancers, and it's tough for a trend to continue up if you have fewer and fewer companies that are leading the way higher, right? You have more decliners than advancers. Look at this. You made a new high here, like we'd shown on the money flow. Advanced decline line, you guys can see. Well, let's just draw the slope. That is not a new high. That is a downward sloping line. I'm going to keep that in there for next week's discussion as well. All right, for those of you just joining us, we're going to go ahead and just hit our sector analysis at the end and do our top-down trade examples for the week after we review just our market and sector total review here, okay? All right, so here's a good look at the SPX EW. So we're getting everything from an equal weight basis, which is not what we get over here. Notice on the S&P 500, these big blocks. This is what's driving the market, and that's why technology is pushing the S&P 500 higher. If we look at the technology sector, which we will in a bit, it's higher. That's pushing the S&P 500 higher. It's weighted to do so. They have more of an impact on the S&P 500 index. When you make it equal weight, all those blocks are the same. So this is another idea, another review of breadth. So when we look at the SPX EW, what correlates with it? To a degree. To a degree, in different degrees. It's a different indicator, but that advanced decline line that we just saw off the prior screen, does it not look similar to the equal weight? Look at this little zigzag move. We're not near the highs. And this can be a leading indicator. Remember, strength or weakness with breadth of the market, the number of these that are all showing positive, right? All at the same size, the same weighted block. We could say big picture. We did hit this high. We broke above that high, but we're watching right now to see if we consolidate a little bit. Because I'll tell you what, just like the Russell, the Russell 2000, we could on an equal weight basis pull back a little bit. This, believe me, would not be the first time I'd seen this happen. Come down here. We could actually form a head and shoulders pattern, inverted that is, again down here. Our neckline could either be at this high or a sloping neckline up is the way I've seen those drawn too. It's just a little bit stronger than the rut. Okay, so we've got some cool things to look at in the weeks ahead to see if that does unfold, and we'll see what indications show that. All right, so here is a look at our weekly, our 5-year weekly. We like to check this each and every week, namely because we're just looking at the Hindenburg omen down below, right? We're looking at the 52 weeks, 52 folks, slash 52. 52-week new highs, 52-week new lows. If we see a large number of each, if they're both up, lows and highs on a 52 an annual basis, it can represent a fracturing of the market. And if so, we're going to get those omen spikes right down here, just like we saw right here. And that foretells, oftentimes, nothing's 100%, but it can create a chasm in the market, and it gives us more insight that we could be looking at a lower high here, and here's your follow through right there. Lower lows and lower highs, folks. This is weekly. Okay? That's a strange looking W. Normally I go like this. Weekly. There we go. That's the weekly I'm talking about right there. I wanted just to note that because of the fact that, to be honest with you, that's a lot of bars right there. When these omens occur in succession right here, or even just leading up to it. Notice down here, we had a little bit. We had it over here too, but it's really the rebound we're looking for. Look at this. Look at that. Look at the weeks. That right there is 3 months. That's a pullback. You might have recognized that. Folks, I'll tell you what, I remember that pullback. That was in 2022, and I remember it because it was a steep one. So this can be very, very helpful here to utilize that those omen spikes. Now, continuing on, let's go over here and let's hit some more. These were our 52-week new highs in the NYSE. NYSE, 2.7 thousand stocks, right? Plus a little bit more. It's a bigger index we're looking at here. You know, if we're going to continue to make higher highs over here, if we don't get that over here, that's another sign of a breadth issue. Okay, and it could also mean that we just had a major pullback in the market. We just have not yet been able to get up to those highs. Those pullbacks were likely tied into a number of the tariff announcements initially. Not everything, but because we've come back a lot in the market. But you know what hasn't come back a lot in the market? And the NYSE. You're looking at it, 52-week new highs, 1-year highs, same thing, right? We're way down here. We've got 76 new highs right there. By the way, there's a cool way to pull this up too. We should look at that one of these days. If we wanted to know exactly what is hitting new highs, there's a lot of tools on the Thinkorswim platform that we can take a look at, folks. Now, I just want to pause for just a second, folks. If you are finding value from the presentations that we're doing here, go ahead, just hit that like button for me. It gives me a good sense that this is meaningful content for you. You guys are finding it useful, helpful, and it lets me know that too. By the way, while you're there, be sure and subscribe. I know many of you already are, but you can subscribe, bottom right-hand corner of the screen, a little button to do that. But yeah, all right, let's continue on here. Let's see. Can you share? Yes, I can. Let me share it right now with you because I do that from time to time, Austin. Let's get that going. And it's right in front of me, isn't it? We'll share this whole thing so you have it. Okay, I wanted to state too that this is a ThinkScript, the omen. I believe it's been pieced together, it's been built. Let me just double check that though. I remember looking at it, but I just want to make sure on one thing right there. Yeah, you could tell it's been written right here. That's the Hindenburg omen, right? think scripts aren't guaranteed for timeliness or accuracy, but let me state this: as long as they are, as long as the data to the platform comes in that's really true and clean, which I mean we have, in my experience, very good data, then that's just going to do exactly what it's supposed to do in terms of delivering what that data says. We just can't guarantee like specific scripts, if that makes sense. All right, so I want to just note that because that is part of what I'm sharing here. A lot of it is just other data, but we do have a script in here that is the Omen. Here it is right here, folks. I'm just going to post that in, and there you go. So now you guys have that. And by the way, when you get it, you can go to the setup applications, under application settings, open shared items. Post that in, copy and paste it here, and then you can just pull it up, just like I've done over here. And you'll have that ready to take a look at, right? Actually, I'm sorry, that's a grid, isn't it? So I shared this. Make sure that goes through for you, but I do have the grid as well. Maybe you want the Omen. Let me do both. Share grid. So you guys have this grid right here. Here is the grid. And I'll just highlight it as that. Okay, there you go. One was just the charts, I think, and then here's the grid for you. Okay, yeah. Is the divergence in the SPX and the AD line show bearish trend can start? So they're kind of hinting towards a lack of breadth. Yeah, is what we kind of looked at on a short-term basis. That's what we looked at. But there you go, Austin and everybody. Okay, and we do accept Riceberg late to class. Absolutely. It is approved. It's approved from me, I guess, since I'm running the show here. All right. We looked at this. We looked at that. This is, okay, look at this. We talked about this before. Seasonality, SPX. There's your average on the SPX right there. The average over a range. And here we go. You see it going up, up, up. Now, this is this year, and we know, hey, it's an interesting year. This is tariffs. But sometimes if it can come back in and pop in line, it might start to look like what the average of the S&P has done for the last, there it is, 10 years. Look at that. 10 years worth of data. That's what this looks like. What's fascinating, folks, you can put a 5-year seasonal data, a 10-year, a 20-year. I've seen a 50-year that looks very, very similar to this. This is just kind of the normal ebbs and flows of the market, but it's on average. Key point. It's not every year. It's made up of some that go higher, some that go lower, but a fair number of them match the average. Is it trading like the average of the market move? You'll find that in there that we shared with you guys too. Yes, Vic, I did share that. That was the second one that says grid on it. So that came through. Oh, no problem, Riceberg. All right. Yeah, you guys see that script? You got it. Yep, perfect. All right. We already looked at our 30-minute chart and we said, hey, this is interesting because we saw the ES. If you guys didn't catch the beginning of our discussion, you might want to take a look at that after the recording comes in because we talked about volume profile on the ES and how it's very interesting. The point of control for the last 9 months fits right in here. Okay. Well, with that, we're marching right on over to our sector grid so we can look at some top-down trades here. Now, folks, as you look at this, really when we're finding strength and we say to ourselves, hey, what is keeping the market strong down here, SPX? We know where it's weighted. It's weighted towards technology because we did look at those weightings. If you're looking at strength, look at this flag pattern over here. I mean, it's showing more strength. It might be unfolding. That we did see some shorter-term weakness. Clearly, there are some indications there in terms of breadth. Advanced decline line, money flow line. Those are both volume indications. And we also saw, well, not volume specifically. There were some other volume indications, but advancers and decliners we looked at. The other one too, communication services has been kind of strong. The one that is interesting that might have that macro driver tied to it, that might be tied into a benefit from tariffs into the U.S. In other words, us, making, perhaps generating more manufacturing, and that would definitely impact industrials, and it could also impact materials. Notice materials is a sneaky one too. it's kind of bounced back up and it's just kind of more recently really holding some strength in there. What is making materials stronger? What is in industrials that's stronger? We want to look at that. Before we do so, remember we placed a top-down trade from last week. We're going to look at that one right now. We had seen that what was showing strength in there. We saw Caterpillar. It had been kind of flat. Cat had been flat, and it had been flat. And guess what? It still didn't give me a signal. But it's still a fascinating kind of a bull flag, bull flat sideways range. Some of the strongest bull flags are those flat ones. Traders will say a lot of times, the technicians will say when the pullbacks are very mild. So cat's still interesting. Remember, industrials, tariffs, these guys are more into the large construction type equipment. But you get into the farming equipment, that would be DE. Now, we did place a 25 share trade on DE. I'll tell you why, DE is expensive. We're in the 500 range, so we didn't do a ton. But notice over here with me, what did we see on DE? DE did actually have a close above the high, the low yesterday. And it did kind of what we thought it might do, but that is that's a bit of a flag pattern over here. Now, we don't know what to expect. It's kind of holding near prior highs. We did put a trade on it. It's up a little bit right now. Okay, because we did buy, in anticipation of that trend line break. But we'll see if it does unfold as a flag pattern, kind of like it's been doing for the last year or so on a series, you could say, of flags, extending that trend from the left-hand side to the right-hand side at a pretty decent clip. It's a pretty decent slope, as you can see. One thing you kind of want to look at here too is once you do get the hold, the close above the high of the low day, once you get that, if you start to break down again, you might trend lower. So some traders might just lift the stop up below that low and, which is a potential exit level, right? Stops aren't guaranteed to initiate. They once initiated, they do compete with other market orders, but that could be, that's our potential exit level right there. Okay. And a flag pattern would be, going to the upside. But some, say for example, if it's a false hold, in other words, it's a fake out, you break up, it fakes out, then it comes back down. But this is a very, very common right now, sort of an indication that you'll see a lot of times with the flag patterns. They don't always just break out day after day after day higher. In fact, a lot of times they go just like this. They break up higher, they come down, they break up, they come down. They don't always just continue on up. There might be some pausing in here. So we're going to leave it be for now, but I did raise that stop up a little bit. But still, again, we're trying to pick up on the potential for a macro trend here. Tariffs. That could last for a while, and that could benefit companies that are U.S. based like Deere. Okay, and maybe have the manufacturing here in the U.S. Okay, Caterpillar too would be potentially another one. All right, well, let's take a look specifically at materials. I want to look at materials today because materials is kind of looking a little bit sneaky. It's showing some strength as of late, other areas of industrials. Now, to do that, we can go right to the scan tab. And what I'll do is I'll just knock that off. And we'll go and we're going to look at the companies that were right in the S&P 500 that we just had looked at. The cool thing I wanted to look at today, though, I want to look at the industry, not yet the sub-industry, of those companies that made up this. Let's hit it. Here are the materials. These are all of the S&P 500 sectors that we looked at previously. But notice this guy is just starting to get a little sneaky here. Just breaking highs that it hasn't done for a while, and we're hitting those highs. Now, if it can break above this range, which we're just about there to testing it, well, will it go higher? Let's check this out. Let's check out industrials, because we may see, based upon what we saw on a short-term basis, the possibility of at least a mild, sideways or corrected pullback in technology, if that happens. But some of the breadth indicators had shown that. Let's see if materials and industrials might show some strength. So taking a look at that, and materials of those stocks that make up materials, this line right here, this candlestick chart, I should say, what are the companies that make this up that fit within the S&P 500? We're going to find those folks right here. I'm in the scan tab right up top. Sub tab, you've got to be in the stock hacker here. I've selected scan in S&P 500, good basket. It's going to match up those charts. We're going to intersect that with our industry, and that industry is going to be materials. Now, notice down here, I can go down and start selecting these other materials, but so this is the material sector. Now, I want to look at this industry right here, all metals and mining for now. I want to look at this and just see what's moving within this group. Is this what's moving or other areas? Before I even do that, look at this. Select just the industry before we get into the sub-industries. There's actually like here, so here's industry. Here is the sector. We've got the sub-industry, and then we've got like the, sub-industry, if you will. I'm going to look at all right here. And the reason I'm doing this is I want to track the performance. I want to see what's going on within each of those. And I want to use another script to help us with this. There's already a pre-built one, folks, if you want to use this, which is really nice too. This is a fast one. It doesn't require like a think script or anything. Right click on any of these columns. I've got a 1 month % change, but if you go over here with me, just go PCT. We have a 5-day right there. Click. I'm going to pull it up. I've got a lot of stuff in here now, so I'm going to take this off. I'm going to take off my 1 month over here. And what else don't I need? I don't need beta. I don't need implied volatility. Don't need this. Okay, we can keep the sector in, fine. Okay, so here we go. There's our 5-day. So looking at over the past 5 days, what's really been moving over that time frame? Also, I have here, right here, the past 1 month. So where's the strength been? Right there. Steel, keep in mind tariffs over here. Oh, what do we have? We have gold in here as well. And when you get gold, a lot of these companies have gold and silver. They're gold and silver companies. Now, what's interesting is you don't get a lot of gold and silver miners within this group, but that's okay. As long as I can look over here and say, steel's been moving, maybe gold and silver, we can also tap back into. Well, I'm going to do this first. I'm going to look at just like the obvious ones, the NUE and STLD, wasn't it? Steel Dynamics and yeah, STLD and NUE. So let's go back over here. Let's pull this up. So NUE, okay. Think of tariffs. Remember, now the Trump administration really done a favor to those workers out there, those manufacturers, and they lifted the tariffs. They were at 25%, now they're at 50%. That announcement caused this to gap up. Okay, so I mean, we're getting, you think about pricing power for this group, STLD. Think about more potential jobs in the U.S. and maybe that helps these manufacturers specifically is what we're looking at. Are these companies they're going to be doing possibly better? That may be tied into that gap. Here's X. U.S. still already had its gap. I mean, I'm sorry, it already had its kind of a rally there. But then also, shoot, let's not forget about gold and silver in terms of commodities. There's GC. Okay, GC's doing okay, but GC, you have to say it's a little bit crowded, and we're not getting a lot of movement in here. GC has had this massive run. I mean, it's been huge, right? Here's a weekly on it. Well, yeah. What's been lagging a little bit though is the silver trade, and there's a lot more industrial uses for silver. The trend is good. It's been strong, but not anything like gold. Let's look at the daily on silver. Oh, there's the big bounce looking at silver, just the commodity chart only, just as a reference for us on some of those other stocks that might be out there, okay, in terms of silver. Okay. So, like I said, a lot of the gold companies do have silver associated with them as well. There's actually also, although we don't talk about ETFs in this class, there is an ETF for silver as well that some traders might look at, right, as an example. But if I come over here and I look at something like an AEM, that's gold and silver. You can see a little bit over here. This is one I actually did in my class that I teach. Okay, so, swing trading. And this is a swing trade you can see right here that we've had on for a little while. This was the flag pattern, right? 1 month, 2 month, 3 month. 4 month. 5 month. 6 month. 7 month. 8 month. 9 month. 10 month. 11 month. 12 month. 13 month. 14 month. 15 month. 16 month. 17 month. 18 month. 19 month. 20 month. 21 month. 22 month. 23 month. 24 month. 25 month. 26 month. 27 month. 28 month. 29 month. 30 month. 31 month. 32 month. 33 month. 34 month. 35 month. 36 month. 37 month. 38 month. 39 month. 40 month. 41 month. 42 month. 43 month. 44 month. 45 month. 46 month. 47 month. 48 month. 49 month. 50 month. 51 month. 52 month. 53 month. 54 month. 55 month. 56 month. 57 month. 58 month. 59 month. 60 month. 61 month Actually, this one's not doing, yeah, this one's actually up quite a bit. You can see on there, this is just paper money, but these are, I mean, it's a higher price stock, with a couple hundred shares, it adds up quite a bit as it's going 10 points, whatever. But it has been one of the better performers out there. They do have they have silver as well, but it's got a combination of silver and gold. Okay. What was the one that came up over here? NEM. Okay. Could this also be the possibility of a flag pattern? It's a little bit of a gap there. Maybe we'll start to trend back up here. That's the question. We could put one in on this for this class though, just to kind of track it a little bit. So let's just do that for now. Maybe another little bit of a bump to the upside. Maybe we'll look at it, as a push because gold and silver are showing strength. So this could be one we could look at. I'm just going to add in, maybe we'll just do 100 shares on this one for now. We can have, well, let's go ahead and just make it a by custom order with an OCO bracket. And what I'll do is I'll just adjust these here in a second. But that is our order dialog box. Always important to take a look at these. I'm just doing 100 shares for this class, a round lot. And there you have it. In terms of a potential stop, I'm just going to put that below our gap. Well, let's see. Yeah, I can put it below our gap up for now. And then the extension to the upside might just be a sort of a move like this, a flag pattern coming up off of that range, something up here. So maybe I'm just going to put it here for now. We can watch it. But notice this prior high that we have over here. It seems to be fitting very, very nicely, or very close to, see that high, to a possible flag coming up. And that's also near these highs as well. So I wanted to put that in here. But, we can go in here. We can look at other areas too where there have been strength. We looked at steel. Steel could be one, potentially off of, well, maybe off the bottom there. It's been down for a while, but maybe it can turn here with those tariffs. So be watching it. One of the key things here is what I would potentially state is like, I would just state is that, hey, have we broken above that high yet? No, we're still there. STLD, same thing. Maybe we want to see a little bit of traction above this level before we start looking for a higher point possibly. At least so that we have a higher high and a higher low, because we really don't have that yet, do we? That's not really a higher high over here. This could be a higher low if we take this out. And have we got a higher high that's actually held? Answer to that, folks, not really. We really haven't broken the high yet. A quick note on STLD as we do it, as we take a look at that. STLD, so not quite there. In fact, there's a couple levels of resistance right there. How's that weekly looking? Oh, yeah. Okay, so it's been there a little while, hasn't it? So maybe give it a chance to see if it can break up and then begin to trend a bit higher, because there is this potential. I'll say this is the last thing here, but if you look over here with me all the way back there, what do we see? We see a lower level, and then I'm just going to use this. I'll use the lower line. We could have a measured move in there of about 30 points. So a 30-point break, if it follows a measured move, that is, it could potentially break above that level, maybe 30 points higher here too, breaking above it. So 140-ish, 50, 60, 70. Now, that could be a reflection of tariffs, but that's looking at a possible measured move. Oh, by the way, so Chris just says inverted head and shoulders. Oh, right there. Thank you, Chris. I think I see it right there. Shoulder, head, shoulder. And what does that foretell? Notice that measured move? Just like it, interestingly enough, right? Look at that. You take the high to the low and you take that same distance. Folks, that's like another 30, right? Very close to it. You get a break above the neckline. So a resistance break here could have more meaning because there is a possibility of a pattern tied to it too. All right, everybody. Well, that is what we had for today. We did get a top-down trade in there, but what I'll do is I'm going to go ahead and right-click here and say create an alert. And if we break above that level, well, if we get above that level, then notify us. And what I'll do is I'll put a trade on in for this class, okay, as well, so we can just kind of monitor. But that'll be kind of our insight there, our giveaway for the possibility of an extra run. All right, everybody. Well, hey, it's been great being with you today. I love to review the markets. It's so interesting and it can be so helpful too, particularly, getting a sense of, hey, where are we looking longer term, shorter term? And of course, well, um, how does that foretell to, or give us insight to a top down trade? Adding them all up, because that's what we do in this class. Markets, sectors, industries, especially when industry, went sub-industry today to find maybe some areas of strength. So with that, folks, if you found value, smash that like button. Great to see you all. See you all next time. Thanks so much, Ben, for your help in the chat as well.